of credit score you need to buy a property. Why? Why do we talk about this? Well, it's because there's so much confusion. I'm going to go over some of this information with you, and we're going to drill down these topics because when I try to do a lot of videos and a lot of topics, I do my research. And it's even astonishing to me when I'm doing my research how much disinformation's out there. One of the first videos I ever did was just about credit scores. And it was because there was so much bad information out there. I'm like, somebody's got to put some context out there, is basically letting people know what should they be doing and what they should be aiming for. So in today's video, we're going to talk about what credit scores you really need. And then I'm going to give you some sources on where to go for those things and everything else. And then we're going to open up the floodgates because you guys got to have questions when it comes to credit scores, because I even have questions and I do this for a living. So let's get to it. Let me go over and explain to you guys why I decided to do this video. So the big piece of this puzzle is, what credit score do you need to buy a house? Okay, so the nice thing about this one is, if you can see down through here, it's updated and it's fact checked. So it's got to be right? Maybe not. Well, let's get to it. Okay, so let's get down through here. Here's the credit scores that this website has to go over and let you guys know what kind of credit score is needed if you're looking to buy a house. So let me get me out of this equation, move me over here. Nope, I did that wrong. Well, let's just keep me over there. You can see down through here. Let's break this down into context. And then again, I'm going to open up the floodgates so you guys can ask the specific questions on which situation you're in. So what credit scores do you need? We go to the first website that I pulled up and I'm like, hey, this is pretty detailed, kind of cool. So we're going to go through here. Conventional loans, 620, FHA, 500, USDA, 620, VA, 580, Jumbo, 680. So this is basically if you're looking for a mortgage, what your credit score is that they're saying that you need, and it's actually fact checked. Okay, so let's go through and fact check it ourselves. So the first thing is, what is your credit score? All right, so that's an anomaly in itself. There's probably 50 different credit scores that you have. And every time I ask somebody what their credit score is, they'll tell me a number. And most of the time, almost all the time, it's not the same. And in many cases, it's way off. Okay, so that's what prompted me to do this video. And then digging into the substance, I'm like, there is so much bad information out there. Let's educate everybody so when they do decide to buy a house, they do need a mortgage, they now know what kind of credit score they need. So let's get over this and fact check it ourselves. Then I'm going to really give you the context of what do you really need to get a mortgage in today's world, and then start asking any questions that you have, because that's why I love doing the live events. So the first piece of the puzzle is, you can see conventional loans. But let me go back to the videos that I was explaining to you guys. This is my first video, one of the first videos I ever did, and it's pretty bad. It's right here. You can see me, I'm sitting at home with my shirt on, and I'm going through and I just ramble on and on and on like I normally do, but it's got over 250,000 views. For me, that's fantastic. Okay. And what prompted that was I kept getting clients saying, well, I was working on a mortgage and my mortgage person told me to pay off some collection accounts. I'm like, no, don't pay them off before you do the mortgage. Pay them off within the mortgage or after the mortgage, because it's really going to affect your scores. But that's what prompted me to do that video. So now let's get off to the context of this stuff. So if you were to Google, just Google out there here, what credit score do I need to do or have to buy a property in 2022? And you go through all these. What credit scores do you need? And you go down through here and it says 620. And then you go down through here. What's a good credit score to buy a house? That also says a 620. It's a good score, but is it needed? Can you do better? Can you do worse? And so forth. So let's break it down. Okay. So the first piece of this puzzle is they're telling you on this website, and I'll give you the context down below, conventional loans, you need a 620 credit score. The answer to that is correct. They are correct. You need a 620 minimum credit score to get a conventional loan. If you have a 619 credit score, it will not work, period. It doesn't work. Okay. So that's the context behind there. They did a fantastic job on that one. Now it gets a little fuzzy, or it normally gets a little fuzzy when people are looking at this next context. FHA. If you do the research on an FHA, what you'll usually find is this. You need a 600, Maybe in some situations a 620, but in all cases, you're going to see that you need a 580 credit score. That's absolutely true. But they nailed it on this one. You can actually get an FHA loan with as little as a 500 credit score. Okay, so let me just put that into context for you. If you're buying a property and you're looking for the minimum down payment, you need a 580 credit score to put a 3.5% down on an FHA loan. But you can get approved with a 500 credit score, but you would need 10% down. So in this case, fact checking, bang, they got it right. Okay, so again, conventional financing, you need 620. FHA, you can go down to a 500 and you need 10% down. Once you hit 580, you can put 3.5% down. Now, here's where it falls off the triggers. Okay, so USDA, they're saying you need a 620 credit score. Is it right or wrong? Got my old trusty beeper here. Let's see what this says. Oh, maybe it's not working. It is wrong. Okay, what do you need when it comes to a USDA loan? Well, let's dive into the USDA programs. USDA is right here. Here's the guidelines for USDA. If you read all these contexts, there's 21 pages. Nowhere in there does it ever tell you that they require a minimum of X. So with a VA loan or USDA loan, there is no minimum credit score. I'll tell you what, if you have under a 500 credit score, you're never going to get approved. But what they'll do is they'll pull 3 repositories or 3 credit scores on you. They'll use that to analyze your data, but they have a whole different system than all other loans. So they really don't have a minimum credit score. That's that piece of the puzzle. The next piece of the puzzle is VA loans. Does VA loans have a minimum credit score? Well, again, you go back to this and it says you need a 580 credit score. Well, is that true? I'm not going to bring out my buzzer again because it's not working very good. Well, it's not true. When you go to the VA guidelines, you can see right through here, there is no minimum credit score required for a VA loan. Okay, so why? Well, let's go back to this. So if we go through here, you see the conventional financing, they got it right. FHA, got it right. USDA, not so. VA, not so. We're not going to get into jumbos right now because what we usually talk to are more of first-time home buyers out there looking to buy a property. So we just debunked half this information. And again, if you just Google it, you're going to go to this page and you're going to see there's all kind of data here. You can go to, can I buy a house with a 720 credit score? What kind of credit score do I need? If you just click this, you're going to first think that you need a 620 credit score or you cannot get a mortgage. Well, I wanted to basically let you guys know that is not the fact, okay? Even though this thing says it's fact checked. But let me explain this to you, what's called overlays. So I'm going to bring me back into the screen here. The biggest piece of the puzzle that confuses everybody is with the overlays. And this is a perfect example of this. Is you'll see in the context of things where you might need a 620 credit score to get qualified. You might need a 580 credit score to get qualified. Well, what happens though is a thing called overlays. Now, what is an overlay? Here's a perfect example of an overlay. Exactly what we just went over with FHA or the VA. It will say that you need a 620 credit score, but that might just be that particular lender. So let's just use FHA for an analogy, okay? You can Google FHA minimum credit score all that you want to, and let's just do it right here. Let's just go down here and what credit scores do I need to buy a home in 2010 with an FHA loan? Okay, so let's see where this takes us. And you can see minimum credit score, and I'll pull it back up on the screen, it says a 580 credit score. You can see that right there, okay? But you can call lenders all over the country, and I challenge you to do this just to prove a point. If you have a 580 credit score, call 10 different lenders. I can almost assure you that 5 of the 10 are going to say, no, you don't meet the minimum credit score. And you're going to just say, well, I meet the 580. They're going to say, well, no, our minimum credit score is 600 or our minimum credit score is 620. That's an overlay, okay? They're overlaying their guidelines, tighter guidelines, on top of the true FHA guidelines. That's the perfect example of what an overlay is. So you might call a lender and you might have a 590 credit score, a 599 credit score, and say, okay, I want to get approved for an FHA loan. And they might turn you down. What happens a lot of times is you're assuming that that's the guidelines, because what they normally will tell you is you don't have a high enough credit score. So if you weren't savvy enough to watch my videos or search, you would think, well, there's nothing that I can do because I don't meet the minimum credit scores. So that's basically my quick analogy of how we debunk credit scores. Okay. So the next piece of this puzzle is, where's a good place to get this piece of the puzzle started? Because where I want to take you guys is, where do you ultimately want to be when you're trying to get approved for a mortgage? The steps that you need to take, maybe to buy your first home. You don't want the minimum. And the reason being is, if you have the minimum credit score, in this case, if you go back to the conventional financing, and I'll bring that back up on the board again. If you go here and you have a 620 credit score, that's all that you really need to get approved, your rate's going to stink. Okay, your rate's going to stink. You're not going to get that rate out there that you see every day. That's, maybe it's 5.25 today. Maybe, months ago it's 2.99, where you see that teaser rate and it's like, okay, I'd love to get that lower rate. You're not going to get it with a 620 credit score. What we want to thrive to get to is a much higher score. And I'm going to go over that in a second with you. But what I want to explain to you guys is, one piece of the puzzle, where could you go to maybe get these credit scores? Well, you might have a Discover card. That's not a bad way to do it. You might use a MyFICO account. You might get your free credit report each month or once a year that you're entitled to, okay? But I have a system, and this wasn't to sell this system, but I have a system that I use personally, and I put the link down below that you guys can subscribe to, is Smart Credit. It's a website that I personally use. And again, this wasn't to promo this thing. You can use it or not. I'll have the link down below. I also made a credit website. It's called Credit Scores and More, because I'm really passionate about credit scores, because people don't understand how important credit scores are. Okay. So this system is really simple. If you go, and again, it's in the link below. What the nice piece of this puzzle does is, you can go in there and there's an introductory cost, and you can try it out for $1. And you can actually play with the system. Here's what I want you to do. If you're in the process or looking to buy your first home, okay, is the timing right or wrong? I'm not even going to get into that argument anymore. And I don't like going in the political sphere, because I get abused from people on there. I just want to be your source for facts, okay? But where we want to get you to is the highest credit score you can get. But don't go crazy. Once your credit score is 740 or higher, you're good. You're going to get the best rate out there when it comes to conventional financing, FHA, VA, or USDA. Now, jumbo is a whole different element here, but we want to strive to get you to a 740 credit score, or as close to 740 as you can get. So by using this system, the cool thing about this system, it puts all these tools into your lap. Okay, so what it'll do is, you go in there and you start, you open an account, and if you lose the link down below, you can open it for $1. And what it'll do is, it'll show you your credit scores, and then you start manipulating with things. So let's say, for example, your credit score is 619. So 619 means you cannot even qualify for a conventional loan. Okay, so what you can do with this system is this. You can go in, and there's I call it a what if simulator. Okay. You go in there and you're like, okay, I got $2,000 or $3,000 that I can allocate to help my credit. You go in there and you say, hey, I got $2,000. What should I do with that to maximize the number of points that I can get on my credit? It'll exactly tell you exactly what to do. Okay, so again, our goal here isn't to get you to an 800 credit score, an 850 credit score. Our goal is to get you to a 740 credit score or higher. Okay, so that's the pieces of this puzzle that I wanted to discuss today with you guys briefly, and then open the gates to you guys asking any questions that you have. But even when you go to a website like this that says, hey, we actually have been fact checked right down here. Oh, where'd it go? You can see on July 28th of 2022, this thing was fact checked to say it was factual and legit and right. But when we go down through here, it's inaccurate. Okay. So without watching this video, you would not know that. Okay. So you go down through here. And again, they did a fantastic job when it comes to conventional financing. Yes, you need a 620 credit score. When it comes to FHA, and this is the one of the websites that I was flabbergasted because I'm like, you guys got it right. You can get an FHA loan with as little as a 500 credit score. And again, the lower the credit score that you have, the worse your rate's going to be. So our goal is to push you up as high as you possibly can get. But once you get to 740, relax, you're good. Okay. But what we wanted to disclose here is, and this is one of the first sites I brought up, was how even it's fact checked, you get down to USDA, you get down to VA. Well, that's where we're going to stop there because we're not going to talk about jumbos today. But those two elements right there, the information that they posted is inaccurate. Okay. So again, what I'd like you to do is answer any question, or I'll answer any questions that you have. You might have a question for Dan. What credit score is used? What credit systems are used? What are the 3 systems that are used? So let me break this down while you guys are looking out there to maybe chat. There's 2 kind of scoring systems. There's actual MyFICO, which is the real credit scores that all lenders use, okay? And then there's what's called a Vantage score, all right? Your Vantage score, I'll put it this way, is more of an educational tool. It's not a credit score anybody really uses. There's no lender in the entire country that uses their system to approve you for credit, for a loan, for insurance, maybe to get a job, or whatever else. You can't use that. What you really want to do is you want to focus in on your FICO scores, your main credit scores. Now, there's 3 pieces, or there's 3 entities out there that provide scoring systems or scores. It's TransUnion, Equifax, and Experian. Okay, you can go to any one of those reporting agencies, and you'll get a free once a year. You can get your credit report for free. Okay, one system that I use, and the reason why I created this website here, and again, I'm not promoting. I guess I'm promoting these websites today, but is to put all this information at your fingertips. All right, what I always tell people to do is, if you're on this website, go here, go to the free scores and monitoring. Just click that. Use that system alone. It's free. The data's not sold. There's no benefits here, but at least it gets you somewhere. What I personally use is this Credit Smart system because it gives me alerts. It gives me all kind of other things. And it has some really educational tools. It has blogs. It has all kind of other stuff that you can use at your fingertips to figure out, can I get a higher score? You can even see in this video, you can see it says Score Builder. Okay, score boosts. There's all kind of tricks and tips and tricks that can be done to increase your credit score. Let me give you one tip. I'll give you 2. These are probably 2 of the easiest tips that you can ever get. And these could add 10, 20, 30 points to your credit score basically within days. All right, 1, ask somebody, maybe mom, dad, aunt, uncle, brother, sister, whomever, if you can become an authorized user on one of their credit cards. Now, you want to be picky with this credit card that you choose from them. So let's say, for example, you go to your parents and your parents have been using this Visa card because ever since you were a kid, every time you go to anywhere, you go out to dinner, you went to Disney or whatever else, they use that credit card. Well, I would go and ask mom and dad saying, hey, you guys had that credit card for a long time. How is it? I'm trying to learn about credit, or be blunt with them. My credit scores suck and I'm trying to increase my credit scores. So ask them if you can become an authorized user on their card. Now, if your credit stinks and mom and dad says no, just say this, well, can you do it for me? And don't even give me a card. Okay, just put me on that account with you and don't even issue me a card. I'm never even going to use it. All right. That's what you might want to say. So when the card arrives, have it mailed to their house, have them cut it up in front of you, shred it, burn it in the backyard, and then bury it so you can't use it. Okay, that's the first one. The second one is analyze your credit. Okay, analyze it. Here's what happened. I was doing a loan for a friend of mine about a year ago, and his credit was good. His credit scores were terrible. Here's what happened. Every time that he went and applied for a mortgage or a credit card, he would just get the minimum. So he had like 5 credit cards that were basically at like a $200 credit limit, right? And you can go in today's world and buy gas and you're going to max out your credit limit. All right. So what happens is it's looking at that is every time you buy something, let's say, for example, every month he just bought gas and maybe went through McDonald's and he carried a $150 balance. All right. Well, the utilization ratio is a big piece of this puzzle. All right. So that person's now owes $150 on a $200 credit line. So they're basically almost to the point of maxing out. All right, they're at 80% of the utilization rate. Call that credit company and ask them, can you increase my credit line? $500, $1,000. If they ask you, what do you need? I'll take as much as I can, but with the best odds of getting it approved. Okay. So let's say, for example, in that case, they come back and they said, hey, we got great news. We increased it to $1,000. All right. So you went from a 75% utilization ratio because you had a $200 credit limit and you owed $150. Now you're at like a 15% credit limit because you owe $150 on a $1,000 credit limit. So now your credit scores are going to pop just because of that. Those are 2 free little tips that you can do to increase your credit scores by basically doing nothing. You didn't spend any money. You didn't really take any actions other than make a phone call or beg or plead to mom and dad to put you as an authorized user. That's that. But if you really want to really dive in on this, because I don't know if you realize this, let me get this out of the way and let's just talk. I don't know if you realize this, but your insurances, like for example, your car insurance, you might get better, or you would get better terms if you had better credit. If you have a 600 credit score, and then you got a quote at a 700 credit score, I can guarantee you those rates are going to be better. You probably didn't even realize you might not even get a job because your credit's so bad. Because a lot of employers will pull your credit and then they'll look at it and say, maybe we don't trust you with doing what you're going to do for our company because of your credit so bad. We don't want maybe credit fraud or anything like that. So there's a lot of pieces of this puzzle that you might not even realize that could affect you or could maybe save you a lot of money by getting a better credit score. So I'm not saying it's easy. There's no magic pill to just say that's going to happen and you're going to increase your credit scores immediately, but you have to start somewhere. But the goal of this channel today is to educate and inform you guys everything real estate, especially when it comes to the financing piece of the puzzle. I wanted to talk today about credit scores and just introducing this to you till you get the concept, and you might find the range of where you need to be to not only just qualify, but I also want you to know the higher you get your credit scores up, the better the rate's going to be. Maybe the less the amount of money you need to put down. Maybe it might get you more of approval authority or so forth. So let's go over and answer some of the questions that you guys have. And if you would, ask any question. There are no dumb questions. I created my first video. Go back and look at that. That was 4, 5, 6 years ago. Got 250,000 hits. I'll put it up on the screen here. So you can go to therateupdate.com and you're going to see, just filter through. And here's all my videos. There's like 1,300 of them, but the number one right here, how to improve your credit score, 100 points in 30 days. And I give you a bunch of tips and tricks and whatever. But as I get more and more, savvy when it comes to credit, I like to share that knowledge with you guys. And what I don't want you to do is do the things that would shoot you in the foot. For example, here's again, what prompted my video that I created years ago. Is I had clients, and it was a pattern. It happened over like a 30-day time period where I had multiple people calling me and saying, I just paid, my credit scores just dropped because I paid off collections. And I'm like, why are you paying off collections? And every one of them told me that my loan officer told me. They all said, I applied for a mortgage. My mortgage person looked at my credit and said, you know what? You have 3 collections on here. They totaled $3,000 or $4,000 or maybe $1,000, and you had the money to do so. So they said, pay those off, get me proof they're paid, and then let's see what we can do for you. Every situation resulted in credit scores dropping. So let me explain to you just this piece of the puzzle, why it happens. Okay. So when you're analyzing your credit, this is the tip and trick. The number one area where people usually mess up is get your credit scores or get your credit. Okay. And with the scores and all the other stuff, you can use this system, use any system that you want. All right. But when you're analyzing that data, I want you to go through it and look at it. Okay. If you have a collection on there, what I want you to focus in on is this. Basically, when was the collection last reported? Okay. That's the number one piece of the puzzle. Okay. If it's over 3-4 years, don't do anything. Well, don't do anything really now, but don't do anything with that. Okay. Because it's really playing really no impact on your credit scores. All right. Here's what the algorithms look like or look for when it's looking at your credit scores. It's running their model, and then it's looking and saying, boom, we see a collection account. Doesn't care about the how much you owe. It could be $1, it could be $100,000. Irrelevant. It is truly irrelevant. Okay. So it's saying you have a collection account, and it's going to say the last active date. Okay. So let's say the last active date was 3 years ago. So by paying off that account, what's going to happen is this. It's showing that you have a collection account. And let's say in this scenario, it was from 2019. Okay. So it's really not having an impact on your credit score. But if you pay it off, what's going to happen is everything's going to stay the same, but two things. Your balance is going to show 0. God bless you, you paid it off. But the one big thing that's going to really bite you in the butt is the new date on there. The most recent date is going to read now. Okay. So it's going to refresh that saying, hey, you have a new collection. It's not reading the data that you paid it off. It's just saying you have a collection account. The last active date was boom. Now your credit scores are going to drop. I guarantee it. Okay. That's what happens to so many people. And I'm trying to have you avoid those situations. So I'm just giving you the tools, the tips, the tricks on how you can improve your credit scores. Because why? The goal here is to get you into home ownership. Okay. If you want to buy a house. All right. My goal is to help you to get you in the perfect scenario to get you there. And one big piece of this puzzle is your credit scores. So the higher we get your credit scores, the better. Once you get to a 740, kind of stop holding back, and you really don't need to go nuts over things. So that's that. So let's start getting into some of the questions. We only have one. Come on, folks. And as you're joining me, please give us a thumbs up. That's all I ask for you to help. It helps the algorithms and helps us get noticed more. It says, how much do lenders typically ding you if your scores are under 720? There's no rhyme or reason. Every rate sheet's a little bit different, but there are what they call loan level price adjustments, which ding you for this, and it would be too hard. If I'd known this question was going to be asked, I could pull up a rate sheet so you can see the differences there. But you might get an eighth, or let's say for every little bucket, you're going to get maybe an eighth difference in your rate. Okay, so let's look at it this way. Here's the buckets that I try to focus in on for people. We have a 740 credit score and above. Let's look at that as that's the A bucket. That's as good as you're going to get. All right, so if you're a 741, 740, 800, you're going to get the same rate. Okay. The next bucket down is 720 to 740. Okay. In that realm, your rate might be, say, a quarter higher. Because you're in, I'll say, the B bucket. It's not saying you're a bad person. It's not saying you're bad. You might just, you might pay off all your credit cards every month, and you're just like, why is my credit scores being dinged? That's another thing that you can learn. You should pay your credit card bills a week to 10 days prior to you getting your statement. In old times, people are going to say, well, how do I do that? Because I don't have a statement. Today's world, you can go in, when they're going to send you your statement, when the cycle ends. If you can have the ability to pay off that credit card prior to that, what's going to happen is your credit report is going to show, instead of your carried balance that you have every month, it's actually going to show a zero balance. So if you have a zero balance, that's going to up your scores. Okay. So you're saying, well, I pay off all these creditors, But on my credit report, all those show up as balances and my credit scores are getting dinged. That's why. Okay, that's another piece of the puzzle here why you're going to really get dinged. So, and then the next bucket down, we went from 740 and above is A. We'll classify that as an A on your test. 720 to 740 is a B. 700 to 720 is a C. Okay, and then we're going to classify under 700. So if you're looking for your first time home buying program, okay, I would have you strive to try to get a 700 credit score. At least you're on the board there. Once you get in the 600 range, in the mid to low 600, this is where FHA loans come into play because they're government guaranteed. They're government, I won't say sponsored, but they're government guaranteed of default. So they will have a better rate for you than if you did a conventional loan. Okay. So a lot of times people say, well, I don't want that crappy FHA loans because those are for deadbeats. No, they're not for deadbeats. You might have absolutely perfect credit. You've never missed a payment in your whole life. You were like my friend who had 5 credit cards with $200 credit limits. And every month he maxed out. But when the bill came in, he paid it off. So he's thinking, I'm doing everything right. He was doing everything wrong. He had a low credit limit. He was maxing out. He was not paying it prior to the cycle date. So in his mind, he's like, hey, everything I did was perfect. I don't carry any debt. But the way he was doing it was wrong. Okay, so I educated him on that. And within 60 days, we had him into the 700 ranges from low 600s. Substantial savings, okay, on his rate and everything else. Okay, so that's that piece of the puzzle. But it's hard to dissect this into say, at this credit score, this is how much how much rate that's going to be increased because of your credit scores. Because on our side of the equation, we try to fit you into different packages or loan types to make it the most affordable to you, what makes the most sense with your financial situation that you're in. So that's why we analyze all this. I always talk to people, and if you ever watch my video, ever talk to me or applied or whatever, the first thing I always ask is, tell me the story. And I'm not being a jerk. I want to know, what is your unique story? I want to know what's going on. What's in your head? What are you looking to do? Let me help you get there. But without the story, I don't know how to get you there. And in these cases, our story is, I have bad credit. What can I do? Well, I want you to first know what credit scores you need to qualify. What credit scores should you aim for? So just because you only need a 620 credit score to qualify for a conventional loan, I wouldn't stop there. Let's see, can we get you up to a 680? A 700, a 720, maybe with a few adjustments, we can get you to a 740, 741 to get you the best rate out there in the markets. So that's my goal. But that was a great question. Kyle, thanks for the thumbs up, buddy. Kyle he is joining our team as we speak. He is with Win the House You Love. Check out his YouTube videos. You'll love this kid. I've been watching him for years, talking with him, and he adds so much value to our team and to YouTube in general. For those out there looking to buy a house, please reach out to, check out Kyle's channel, and you'll find nothing but good stuff there. He goes in a little more in depth than I do. He's a little more formatted. He's very structural. I come on here. I love this live stuff because I love when you guys ask questions. Today, and for some ungodly reason, not a lot of people were asking questions, but if you're on here, please ask a question and at least give us a thumbs up. Let's go to the next one. Do mortgage lenders use the FICO score or Vantage score 3.0? Why do scores differ so much between credit bureau systems? Perfect. So let's go over the FICO. I think we just went over the FICO score and the Vantage score. So FICO is real credit, real scores, real people use it. Okay. Lenders use it. Insurance companies use it. Employers use it. Nobody uses the Vantage score. So then you're going to say, well, why does it exist? It's an educational tool. Okay. You can run it every day. It's not going to be a hard hit to your credit scores. It's not going to do you anything. It's a good, valuable tool to see. I always say this, when you're trying to fix your credit, you have to figure out what your baseline is. What is your baseline? Well, it's where your credit score is today. So you might pull your real score and say, geez, I got a 780 score. Never even knew that. You're awesome. Well, then just check the data for accuracies, because I think it's 90. I forget what the data is now. I've done this about 4 or 5 years ago. I can honestly say there's probably 90% of the data in your credit report is accurate. The rest of it might even be on there. You might be saying that's not even me. Okay. So the FICO scores, I didn't realize this. When I did my research years ago, there was about 36 different credit scores in the FICO categories. There's over 50 now. There's 50 different scores. Okay. It's bonkers. All right. So let me just break this down. This is going to get really confusing. So you might even take notes if you're really into this. There's 3 repositories, meaning there's 3 basically scoring agencies. There's TransUnion, Equifax, and Experian. Okay. So let's just go with TransUnion. Okay. So we know there's three scoring systems. Under each one of them, there's 4 different models. There's a credit card, there's an insurance, there's a car loan, and there's a mortgage scores. Okay, so there's 4 scorings under theirs. So if I haven't lost you yet, remember, there's 3 repositories, 3 main companies. We're going to just pull out one, TransUnion. Now, under TransUnion, there's 4 different scoring algorithms, we'll say. Okay, again, car loans, mortgages, insurance, and credit cards. All right. But then under each one of those, there's other categories. There might be for example, Benjamin just said Vantage Score 3.0. So FICO has score systems like this. They might have a FICO 8, a FICO 3.5, a FICO 5. Okay, whole variations of it. So again, you have the TransUnion. They have 4 different models. Then under each one of those models is 4 different more models. So it's very confusing. So you probably aren't going to pull your mortgage score. So if you just pull your own FICO score, you're probably going to get 3 or 4 credit scores. It's not going to be the same one I use as well. But at least it gives you a starting point to say, okay, you might look at it, and the first thing you want to do is analyze it. All right. So let's get your report and let's analyze it. And that's one of the reasons why I created here. Let me just walk you through how to do this. You go to creditscoresandmore.com. All right. And what I did with this system is I said down through here, if you want a free credit score, just click it. It's going to take you to one of those free sites and you can do whatever you want. And I use all of them. If it's free, I use it. Okay. Then the next one is, what is your true credit score? All right. This will give you your FICO score. So we click it. Where does it take you? My FICO. Why? Because that's the one I really care about. Because if you're applying for a mortgage or you want to get a mortgage, I don't care about your Vantage score. I want to know your FICO score. By using this system, I think you get 20% off. If you use it, God bless you. If you don't, go to my FICO, however you want to do it. My goal is to educate you guys on this stuff. So the first thing is you get your credit report. The thing I want you to analyze is go through it and figure out, is it accurate? So is your name accurate? How many variations of your name are in there? Is your social security number right? Are there variations of your social security number? Then start breaking down the content. Do you have a collection in there from 3, 4, 5 years ago you didn't even know about? If you're a junior or a senior, I feel for you, because I can almost assure you you're going to have credit either on your son or your dad on your report. It could be helping you. If it's helping you, God bless you. If it's hurting you, let's get rid of it. Okay, so basically you want your FICO scores. Okay, I don't care if you're out there looking to buy a car, you want to get credit cards, whatever, your FICO score is what everybody uses. So you get that report, then you start analyzing it. You look at the accounts. Oh, those accounts are accurate. Or there's a Discover card on here. I don't have a Discover card. Well, in some of these systems, you can actually dispute it or get it corrected right through the system. That's why I use the Smart Credit app myself, because if I have any disputes, I do it right through their systems. Okay, so that's that. The other piece of this puzzle is collections. Do you have collections on there? All right. You might not even know. When I bought my first house, it was funny because I'm sitting there and the mortgage person called me and they said, Dan, you have a collection account and you need to pay it off before we can get this going. Just like the people told you guys. I didn't know any different at the time. And this was 30 years ago. And we really didn't have all the scoring systems and everything. But I'm like, what is it? Because I was kind of fresh out of college, had my first job. I had it for 2 years. And I'm like, I'm buying a house because I moved to Chicago and I didn't want to pay rent. It was a Sears bill that I owed $80 on from 4 years ago. What happened to me? There's a Sears right across the street from where I was working. So I ran over there, paid it off, came back and got my mortgage and was on to home ownership. What I'm getting at is I didn't even know. I didn't know I had a Sears collection. All right. So now I know. So by you getting your credit reports, now you know what you're working. What's your baseline? So you get it back and your baseline is you got a 640 credit score. Okay, cool. We're going to work on that. So now we're going to go through there. Is all the data correct? No, there's some data that's not correct. Well, again, through this system, and I'll keep popping it up and it's in the description down below. Bear with me a second. I'm using this system for the first time, so bear with me here. If you go to Smart Credit, and the link is down below, you can do all this right on the site. So you're in there and you see a Discover account that it's not yours. You can go in there instead of sending dispute letters and all this other stuff. You go in there, click, click, click. They handle it for you. Okay. If you want to handle it yourself, handle it yourself. All right. But what I'm getting at, we need to find the baseline on where you are. Again, if you're at 740, don't do anything. But what you want to do is check for the accuracies. Okay. So that's the biggest piece of this puzzle that I was trying to educate you guys on. I can talk about this for hours, but I don't want to bore you. And we're starting to lose people off of this. So if you have any questions, I would love to answer those for you. And then we'll take it from there. Because usually once one person starts asking questions, then the snowball starts to roll. So let's see what we got. Benjamin, I think and again, Benjamin, the reason being is they don't talk to each other. They are completely different systems. You'd be amazed if you have your car credit scores and I pull your mortgage credit scores. Don't be surprised if it's 30, 40, 60, 100 points different. I've seen up to 100 points difference from what you're getting on your credit score systems from like Discover and so forth, from what I'm getting on our mortgage credit reports. So that's that part of it. Next piece of the puzzle is, next question. Jose, I locked rate back in June 23rd. Should I try to obtain a lower rate? Yes. And Jose, what I would ask you to do is call in. If you're already with one of our mortgage advisors, cool. If you are not, what I ask you to do is email me. My email is down in the description below, but it's simple. It's Dan, I know I got a cold, guys. Dan, D-A-N, at therateupdate.com. Send me your loan estimate. Send me your lock. What it's going to tell me is this. It's going to, well, you know what it's going to read, but it's going to give me your name and address and all that stuff. It's going to give me the house's value. Then it's going to tell me what rate you're locked in at, how long that rate's good for, and then it's going to break down all the stuff. It's going to how much that rate's costing you and how much is this and how much. What we're going to do is I'm going to analyze this. The only thing your loan estimate doesn't have on it is your credit score. So we're talking credit scores right now. So if you know your credit score, just when you email me your loan estimate or your rate lock, please put your credit score in there. If you don't have it, go to creditscoresandmore.com and pull the free thing and send me and let me know what the credit score is. If you want to spend $1, you can use the Smart Credit system. It's cool as all get out. I use it, and you can use that as well. But that's what I would highly suggest you do. Just give us 15, 20 minutes. We'll get right back with you, telling you exactly what we can get you based on, again, it's based on the information that you're providing with us. But I greatly appreciate you reaching out, Jose. The next question is, let's see, is it true as a negative ding on your credit? Is it true as a negative ding on your credit gets older? Yes, it does. And that's why I was talking about the collections. Is the collections just go longer and longer and longer. If you have a collection from 10 years ago, it's not doing anything. Okay. You might still owe it. But again, if you pay off that account, so let's say you have a 620 credit score, you just made it. All right. And you have a collection account, it's $500 from 8 years ago, not doing anything to your credit. You pay that off today and you send in a thing and we rerun your credit, I can almost 100% guarantee your credit score is going to go below 620. So do not pay off your credit. Pay it off at the closing or after the closing or whatever, but do not pay it off and then have your lender rescore you, because you just shot yourself right in the foot. So that might be it for today. I actually thought we'd get more viewers today. We probably will. It's right in the middle of the day on a Tuesday. We'll probably get a ton of hits on this video once it gets posted on YouTube because it's a live event. So if you guys got any more questions, please post it. If you don't, I think we just got another one. Let's see. What can you do? Trouble credit agents. What can you do if you have trouble getting a credit agent to update your account? Manage it yourself. Okay. And that's why, let me get to on this. And again, guys, I wasn't doing this to promote this website system, smart credit. I've kissed a lot of fraud. I've done this for 33 years. Okay. I kissed a lot of frauds when it comes to credit repair, working with credit agencies, directs, and everything else. This system is by far the easiest system, and it's cheap. Instead of paying a credit repair company thousands of dollars, subscribe to this system. It's I think $25 a month. Do it for 2-3 months. I guarantee it'll help you tremendously. And then stop. You'll probably like it because you get alerts. You get all this other stuff. You don't have to. You can do it all within the site. You can link your accounts to it, your checking accounts. You can pay your bills through it. You can make it as elaborate as you want, or it could just be there to notify you if and when you get charges, what your credit scores are doing. It'll ding you saying, hey, congratulations. What you're doing with your credit is helping your credit scores. Or it might say, hey, you missed a payment. Your credit scores just plummeted. You better get on this. And it also does exactly what you just asked. It helps you correspond with the credit agencies to fix this stuff. So by doing it through this system, it tags it in the system. So now you know that that you sent in the request. Now, if they don't do anything within 30 days, they have to release it by law. So let's say you have a collection account out there from 10 years ago and you don't like it. You're like, I can't get anywhere with this place or whatever. You could actually go in there and dispute the account or do something with it. That agency then has to respond. If they don't, then it'll be removed from your credit report. So these are little tools and tricks that you guys can use. Again, I can sit here all day long and educate you guys on credit, but I want to answer the questions that you guys have specifically like this. So hopefully that answered your question, Brandon. But that's the system I use personally, and that's why I use it, because I got fed up with trying to get a hold of the agencies myself, and then when you do talk to them, they're like, well, we have to do this, and then we got to get a hold of that creditor and all that. You just get the runaround for days and weeks and months. Where this is, you click, it's like that. What's that fryer or whatever? Set. The cooking thing, set and walk around. I don't know. You know what I'm talking about. But that's that case. So let's get to the next one. We have Benjamin. Thank God you're on here today. Dude, you're the only one asking questions, and I appreciate it. All right, please explain how you use credit scores. When you average my wife's and my credit scores together, and when you use the lowest credit scores, both of us. Okay, so just recently, here's how it normally worked for years. When I got in the business, there wasn't even a thing called a credit score. And then the credit scoring algorithms and system came into place. It's very good, but it has a lot of faults. But they basically did a lot of that piece of the puzzle to help on discrimination pieces, because now you can base it on a credit score. You can't look at a name or whatever and say, I don't want to do those. So now it's all score driven. But here's how it works. You should have the 3 scores, okay? Again, those 3 repositories: TransUnion, Equifax, and Experian. So if you have enough credit, it's going to create a score, all right? These scores vary widely because they each have their own little weighted average towards something. Like, for example, when we pull your mortgage credit, it's actually giving more weight to your mortgage, your current mortgage, if you have one. Why? Well, we care how you're paying a credit card or something like that. We really care about how you're paying your mortgage or your rent, because there's even rent boosters now you can add to your credit report. Another tip for you if you're out there. If you're renting and it's not part of your credit report and you've never missed a payment ever and you want to boost up your credit scores, you can do that also with this, and even on creditscoresandmore.com. But how it works is, we pull credit on all the applicants on the application. So let's say in its simplest world, there's 2 applicants. All right. and they're applying for their mortgage. Let me get this out of the way. I apologize. Let me put me back in the middle of the screen. So you have, I'll use me for an example. We have me and my wife. We each have 3 credit scores. What happens is they use the middle score of each one. Okay, so they're going to take this and it's lined up numerically. So if you have a 700, a 600, and a 500, they're going to use the 600. Okay, but what they're going to use is the lowest of the two. All right. Well, they've used that for years. Well, all of a sudden they're like, oh, that's not a bad model because one person, let's say, for example, I might have a collection and my wife never had a collection. Well, my credit score stinks because it just happened, but I'm not a bad guy. But so they're like, well, so a whole bunch of other things, but let's take that beside this one. What they did now is they said, okay, to qualify, we'll average the two. Kind of makes sense. Okay. So they'll average the two, but now that's just to qualify. When it comes to the rate that you're going to pay, it is based on the lowest middle score. And again, they're numerically. So you pull both you and whomever else might be on the application with you, line them up numerically, grab the 2 middle ones. The average score can help you. For example, to qualify, we were just saying earlier, to qualify for a conventional loan, you need a 620 minimum credit score. Let's say you have a 580 and the other co-borrower or other borrower is at a 700. Well, you fit, okay? But your rate's going to be horrendous because it's going to base it off the lowest credit score. So it's kind of good to get you qualified, but it's really going to whack you when it comes to the rate time. So that's basically how it goes. So that just came into play probably within the last year. And I a lot of times I also forget about it. When I'm looking at analyzing people's credit, I forget that they average it. But very rarely do we have anybody way down there that we can't really do anything with. But thanks for the question, Benjamin. And let's go to the next one. Sorry, I don't have a moderator here today either. Does your credit score affect the amount of money you can borrow? No. It'll give you better terms, but it won't affect how much you can truly borrow. What you can borrow is based off of, the credit score is a piece of it, and your income is the biggest piece of that puzzle. Now, where it could come into play is your credit score might not be high enough to apply for or get a loan for the size of mortgage you might need. So let's say, for example, you need a jumbo loan or a jumbo mortgage. Well, many times those need a 720, maybe a 740 credit score. So you might not even qualify for those, or you might have a 680 and you might qualify for $1 million loan, but you're looking to buy a $2 million property and that needs a 720 or 740 credit score to qualify. So it could, but normally it's in its generic term. No, it usually doesn't affect how much money you can borrow. But that was a really good question. And let's see the next one. This is a lengthy one. I'll put on my glasses for this one, guys. I'm old. So if I go into a buying process and one score is dramatically different because the account isn't updated properly, will the lender care? Yes. Equifax is taking forever to update. Currently 45 points lower. That's why there's 2 ways that, Brandon, you could do this. Timing's tough. But if you use that system that I had, the Smart Credit app, you can do it right on there, and you can actually time it right on there. Because when you go in and you do the updates, it basically timestamps it right then and there for when it gets done. With another thing you can do is if you're working with us, we can actually do a rapid rescore. What happens is let's say, for example, you have that account that didn't update properly. You can get a letter from them and get that to us. We can actually send it into the bureau level. And this is going to get confusing, and have them rapid rescore it. And that's why it's called a rapid rescore. It's going to cost you about $100, $150 to do that. But we don't do it that often because it can get really expensive. But in your case, let's say you're building a house and you need that mortgage like by the end of the month. You don't have a month or 2 to wait. Those are the times where we do that. And it helps substantially. But the Smart Credit system will do that, help you do that. It'll time stamp it for you so you can actually monitor it on there as well. But that's another one of these areas that we can really help you, because when we pull your credit, what happens is the credit report pulls up and it'll say, okay, on this one, Brandon's credit score is, boom, boom, boom. TransUnion, Equifax, and Experian. But under each one of his credit score, it'll give me a plus. And it might say plus. In your case, I think you might say currently 45 points lower. In that case, it'll probably give us a plus 45. And it'll say, if you do this, you'll pick up those 45 points. Well, I was never able to find that on the consumer level, what you guys are looking at or for. That's why I reached out to Smart Credit to get an account that I can offer you guys, because I use it. And the reasons they're being is I just laid out about 5 different reasons why I use it. Now, if all consumers use this, it'd make my life so much easier, because you would know the scores you're getting. You could get your credit updated. You can get in, for example, in Brandon's case, he could be working on this, knowing when it's going to take place and so forth. So that was great questions. And that's why I like when you guys ask questions. It opens up kind of the floodgates. I know I'm boring to listen to half the time because I'm all over the map. I know you guys, your time is of importance, but I want you to understand all this stuff and replay it back and so forth to get the context of all this. But your credit, I can't strive. They should teach credit in school, even in middle school, especially in high school. That people don't understand. If you get that cell phone bill and you're in college and you get out of college, and you're, screw that bill, I ain't paying that. It's going to haunt you for a long time, and it's going to kill your credit. It might affect you renting your first home. It might affect you getting that first job. It's going to play havoc on your homeowner's insurance, your car insurance, and the whole gamut. So let's go to the next question. Let's see what we got here. Next question is, my lender got upset that I had another lender pull my credit, and she said it caused my scores to go down. Does that affect your scores? It's bad to shop around with three. Is it bad to shop around? Jade, I hope you reached out to me and my team. And I'll never yell at you for getting other quotes. Where people shoot themselves in the foot a lot of times, they just keep going around and around and around, getting quote after quote after quote after quote after quote. Then you get to the point where you missed it, or not. It's not always the best quote or the best rate that'll get your loan done. It's making sure you get the right program. The person's accessible to you. If you're putting a bid in on a house on Sunday afternoon and you need an updated pre-qualification letter, can you get it? Do they know, during the process, if you get a curveball thrown your way, how to handle those things? I've seen so many times where my rate is just a hair higher than the next. And I'm like, okay, good luck. And I'll kid you not, 2-3 weeks later, I'm getting calls panicking. Dan, I need your help. They told me this, and what you told me was exactly right. Here's what they did. And I'm like, okay, but I'll get you done. But please let your realtors know that it's not me that delayed all this, and I'll do everything I can to help you. But normally your credit score isn't going to drop because they pulled your credit, okay? What will happen is your credit scores could potentially change every day, okay? Why? Well, let's say, for example, you have a car loan, 2 car loans, 2 credit cards, a mortgage, 2 student loans, and I don't know, an Amazon account, okay? So you have 8 accounts. Every time one of those send in your rating, to how you pay, what your current balance is, all this other stuff, it changes your score. So let's say, for example, you apply with me today and I pull your credit score, and then tomorrow your Discover bill hit and you've charged more on there than you normally do. So you have a $1,000 credit limit and you're now at $1,000. Well, you're maxed out now. Your credit scores are going to drop. So the next day you then apply at Chase or wherever you apply, and your credit scores drop. So most of the time the person's going to say, well, Chase, you're the one that caused my credit scores to drop. And they're going to say, I didn't do anything. So that's what can happen. So by you getting multiple, credit pools within a short term isn't really going to affect your credit scores. It might a point or two, but you should know that they can potentially change every day because it depends on when your creditors upload their data. In the Smart Credit system, it'll tell you when your credit when your credit vendor is going to update your credit scores. So think of it this way. You have a Discover card. Well, you have the Credit Smart system. You're watching it and you're like, hey, my credit bill is due, Friday. I know I'm going to be applying for a loan here shortly or whatever. I want to get the maximum score I can get. So you run the simulator. It's telling you, well, if you pay that off now, you're going to pick up 20 points. Pay it now before Discover shoots that data over to your credit reporting agencies, because you're going to pick up those points. Okay, so there's tons of pieces of this puzzle. Again, I hate repeating myself because then it really looks bad. I wasn't really doing this video to show you guys the smart credit system, but we're funneling back to it every time to make it make sense for you. Okay, so that's, hopefully I answered that question for you. But thank you so much for that question. Okay, so we got Joey. Jade, the lender should not be upset. They pulled him. Thanks, Joey. It can, if they're the 5th or 10th or 20th lender out there, but it really shouldn't. And that is it. So I can't believe, and we're on here for an hour. We didn't have as many people on here as I thought. I thought we would be flooded today, because this just shows you how well, hopefully you find from my information, my enthusiasm, how important credit really is. But my concern is we didn't have a lot of people on here, because I still think a lot of people, they get it. They know that a high credit score can really help, but they really don't know the fundamentals of everything. So again, if you take anything away from this video, is what do you really need to qualify for a mortgage? Well, basically shoot for as high as you can get. But once you get to 740, stop. Don't Google search and say, that's another reason why I say don't get your mortgage just by Googling and trying to find the best rate in town. They might have an overlay that you didn't know about. We just discussed overlays. If you weren't here for that, watch this video again later and chat and do everything. Now we got all this other junk coming through. So if you guys see this, I get spammed all the time. So it's not me trying to be crude on a lot of this stuff, but bear with me 1 second, guys. We're getting a lot of adult thingy stuff on the chat bot. That's not me, so I'll try to fix that. But the conclusion of this, guys, don't just go to the websites and find the cheapest mortgage out there, apply, because one, they might have an overlay that can't help you. Then what do you do? Okay. The next thing is use some kind of system. Go to creditscoresandmore.com, go to Smart Credit, do whatever you want. Order your free online one. Get your credit score, get that benchmark. Okay. And then don't just order it and say, okay, my credit score is good. Analyze the data. It could take you 3 minutes. Just go through it, make sure the accounts are on there that are yours, validate the numbers, the balances. They're probably not going to equal what you think you owe anyways. They normally don't, but their information's accurate. Check collection accounts. Again, if you have a collection account, the one big thing I can have you take out of this is, if you have a collection account, don't pay it off right now. Talk to somebody and see, is it needed to be paid off? Is it required? And never pay it off prior to the closing, because you're only shooting yourself in the foot. So my name is Dan Frio. I am a mortgage advisor. I can help you anywhere in the country. If you're out there looking for some help and assistance, please check out any videos that I might have popping up here at any time, and reach out to us. I'd love to help you any way I can. Let me see if there's any other questions. If there is not, then we will call it a day. We are not. So that is it. I want to thank you guys for joining me today. God bless. And I'll be back tomorrow for the live morning update. I hope you guys like that live feature, because it's I like it.